When sophisticated capital starts getting restless, pay attention. What's happening right now between Warner Brothers Discovery, Paramount Global, and Netflix isn't just a bidding war. It's a live case study in investor psychology, power, and patience. These are the inflection points that separate noise from real strategic movement. But here's the real playbook. Most of what you'll hear focuses on headline price and regulatory hurdles. But that's surface-level analysis. The real driver here, the real edge, is psychological leverage. At this level, deals aren't just about valuation. They're about how certainty, time, and control get priced into capital decisions. The real focus is certainty versus optionality. Netflix's offer may not be the highest on paper, but it offers something extremely valuable: clarity. There's a board-endorsed structure, defined terms, a visible execution path. And in large-scale transactions, certainty does something powerful. It anchors valuation, reduces discount rates, and narrows outcome ranges. Capital rewards narrower ranges. Now compare that to Paramount's approach. The bid is higher, more aggressive, and puts immediate pressure on shareholders to ask, do we take more cash now? Or do we stay on a longer path with layered uncertainty? But here's the key: uncertainty isn't a flaw, it's leverage. A higher bid reframes the conversation and forces everyone to quantify their tolerance for time risk. That's strategic. Which leads to the dilemma of cash today versus distribution optionality. Paramount's offer is simple: all cash, immediate liquidity. That simplicity alone carries weight. A guaranteed dollar today can feel more real than a potentially higher dollar 2 years from now, tied to spun assets, integration timelines, and regulatory processes. But let's think elite. Cash is powerful psychologically. Time is expensive mathematically. And the market constantly balances the two. When timelines are stretched, fatigue sets in. Internal rate of return declines, and portfolio managers start recalculating opportunity cost. Time risk quietly erodes expected value, even if the long-term outcome could be superior. And though the erosion is rarely dramatic, it is constant. But why does this matter beyond just this deal? Let's think consciously. A hostile bid is not about price. It's about perceived control and who dictates the tempo. Certainty increases liquidity, and liquidity attracts institutional investors and their capital. Uncertainty, even when attached to a higher value theoretically, slims out the buyer pool and turns risk off for investors. And here's a gem. Time itself is a risk variable and compounds against you when clarity is delayed. Paramount isn't just offering more money because they want the asset. They're reframing the moment. They're saying, why wait? In a consolidation-heavy environment where strategic windows open and close quickly, time carries a premium almost equal to capital cost. Netflix counters that by emphasizing execution discipline, seamless integration, and cleaner regulatory navigation. The message speaks directly to institutional investors who think in probability distributions and not headline valuations. What this reveals about capital psychology: when you observe the patterns operating at scale, there's consistency that shows major decisions are rarely won by the highest number. They're won by the most coherent story, and that story usually rests on 3 pillars: execution certainty, regulatory confidence, and time to value realization. Everything else is just noise layered around those variables. Paramount made a disruptive move, Netflix reinforced its position, and WBD's board now sits at the intersection of short-term price maximization and long-term strategic architecture. This situation is far from resolved. So when people ask, who wins? The answer isn't about who closes first, but more about which narrative the market internalizes and how capital ultimately reprices risk versus certainty. Because in the end, markets don't just price assets. They price conviction.